How's it going, everybody? Welcome back to the OIG podcast. Kevin Orsinger, myself, Max Messett. Another episode here. Camera's a little fuzzy here. Let me see if I can get this to focus back for us. Oh, it'll do it there once we start going. So, this is Roth Conversion is the topic today. Something that Kevin and I do a lot of conversation about. Another one of these things that we add, another tool in the repertoire, if you will, of just something you can think about as you have these retirement assets and what you're looking to do, what goals you're looking to accomplish. This can be another strategy or a way to accomplish some of those things you might want to. And today we are going to hit on some of those benefits of it, details of it, and ways you can use it in your plan, and some things that it can help you out with. So I think let's go ahead and just dive into it. I will start this off with, these are for pre-tax accounts. So it kind of rolls into what we talked about last week with RMDs. This is a similar conversation with those pre-tax accounts that have grown over time. You've probably put money into through an employer, and how we will get these now into a tax-free account on the Roth side if you haven't heard of those before.
And we've talked a lot about Roth IRAs, and for people of a certain age, it's the savings vehicle of the future. If you're 20, 25, 30, 35, 40 years old, 45 even, you should be putting money into a Roth IRA. If you're older, or you're in a situation where you get phased out of Roth IRA contributions, your income is too high for it, the Roth conversion is really the way to circumvent all of the other Roth contribution rules and get money into that Roth type of account. And as you said, they're pre-tax accounts. So they're IRAs, simple IRAs, SEP IRAs, 401ks that have been rolled over, 403bs that have been rolled over. And the way it basically works is you can move money from an IRA directly into a Roth IRA. So let's say you decide I want to do $100,000. You can move $100,000 from your traditional IRA into your Roth IRA. You do owe taxes on that $100,000. So keep that in mind. And we would recommend as you go through this that you're working with the CPA to make sure any taxable events that occur you're aware of. We're not shocked because we've now somehow moved up 2 or 3 tax brackets in trying to do this. But in moving that $100,000, you open a Roth conversion or a converted Roth IRA account with $100,000 balance in it. Taxes are due on that because you did, for all intents and purposes, make a distribution from a taxable traditional IRA. But it allows you to then start a 5-year clock on that $100,000 conversion to, at the end of that 5 years, that entire account is available to you tax-free. The benefit to investors is, as I try to explain it, look at it this way. If you have $100,000 in a traditional IRA today and you don't do anything with it, you let it sit in a traditional IRA, and 5 years from now it's worth $150,000 and you need all of that money, you pay taxes on $150,000 withdrawal.
Yeah.
If today you do a Roth conversion of that $100,000, so you move $100,000 into a Roth IRA account, 5 years from now that $100,000 is worth $150,000. You can take that $150,000 out without paying any taxes on it. The only taxes we paid in that scenario were paid on the $100,000 conversion from 5 years ago. So there is a way to kind of lessen a tax burden over time.
Yeah.
By doing a Roth conversion, even though you have to pay a little higher dollar amount in taxes today.
Yeah. I think you hit on to that. The big detail to some of this is that 5-year rule. Of getting that converted Roth IRA account opened up. Still holds that 59.5. These are still retirement accounts, but that 5-year rule of getting money in from that first dollar hitting has to have a 5-year timer to be able to touch that growth, penalty and tax-free, to have that tax-free side of these accounts. That's the whole point of these Roths, is to get out of that pre-tax and get to that after-tax, so we have all tax-free growth. We then, as we're dipping into these accounts and need them for retirement money or income, we've already paid the tax, so we don't have to worry about it then. and I was going somewhere on the other side of that, but it will come to me as we keep talking about it with that 5 year rule. So I guess that was just something. Yeah, keep in mind of that. This is still the rule of every conversion you make starts its own 5 year rule in there. So something to think about for investors as well. I don't know. Obviously, there's a strategy behind every time that somebody would do this. This isn't just willy nilly. And Roth IRA sounds great. You have to know your situation. Like you said, working with an accountant, you don't want to bump up taxable income if it's not something that you are in the position to be able to pay, or this tax year, if you have some other stuff going on with a business. But yeah, those are little details in there that should be known about. And like you said, that 5 year, each conversion starts its own 5 year clock. So as we do this, kind of something to keep on a schedule. Have a plan. We talk about a lot being connected with your money. If a Roth conversion is something that you've talked about, you heard about, you're thinking about doing, now's a great time if you're not connected with your money to get connected with your money, because you want an idea behind doing these conversions of what it's going to look like, what tax-free money is going to happen, what's your time clock of when you think you're going to use it. So yeah, after you said that, I just kind of wanted to make sure that that investors were aware that there is that 5 year. This isn't, hey, let me convert this and then tomorrow I'm going to go withdraw it all tax-free, on anything that has had growth over time, or in 2 years, your markets did well, let me just pull everything. There will be some consequences with that because there is.
Yeah, the converted amount is always available to be taken out. But like you said, no growth can come out without tax and penalty within the first 5 years of a conversion. Roth conversions have been around for a while, but there were always IRS handcuffs on them. There used to be income levels. If your income was above X, you couldn't do a Roth conversion, which really hampered people's ability to do it. Just some key rules with this now. There are no income limits. So whether your taxable income is 100,000, a million, 10 million, or you have $50,000 of taxable income and you want to do a $500,000 conversion, you can. There's nothing stopping you. It's taxed as ordinary income. There is a hard December 31st deadline for a conversion. So unlike making contributions to a Roth IRA where you can do it through April 15th of the following year before you file your taxes, that does not exist. If the conversion has not happened before December 31st of a given year, it happens in the following year, ultimately. There used to be a Roth conversion recharacterization, which means if you did it and realized it was a mistake because your taxable income went up significantly, you used to be able to reverse that. There was a process, and you got a little slap on the wrist for doing that as well, but there was a process for it. At this stage, that it's completely irrevocable and irreversible. You do a Roth conversion on January 5th, that Roth conversion has happened. There is no going back.
Yeah.
As Max said, no age restrictions. So if you're 35 years old or 40 years old and you have a big IRA and you haven't started a Roth and you wanted to jumpstart it, you can do that. Again, same rules apply. You have to be 59 and a half to get the tax-free growth benefits from it, but that is a way to get started. Yeah. And again, no age restrictions. So if you're 80 years old and you want to do this, you can. You are required, if you're above the required minimum distribution age, and if you listen to our last episode, that's age 73 currently. You do have to satisfy your RMD first, and then you can convert anything you want after that. So the doors are really open for people to do this. The biggest hangup we get from people that want to do this is, where does the money come to pay the taxes?
Yeah.
So if you do $100,000 conversion, you're probably going to owe $25,000 in taxes on that conversion. Where does it come from? Do you have that sitting in a non-IRA account? You could utilize. Is it at the bank that you could utilize it? Ideally, you don't want to make a separate withdrawal from an IRA to cover the taxes, because now we've just added to that taxable event. So a big part of the planning in doing this is, where are the tax dollars coming from to cover this conversion? Great long-term benefits. One of the things we didn't mention, no required minimum distributions on a Roth conversion. So when you get to age 73 and above, you don't have to take any money out of this if you don't want to. Your beneficiaries also will get this money and get to withdraw it on a tax-free basis. So that's important for the next generation. If you're leaving it to kids and grandkids, that they inherit $100,000, that it's all theirs. It's not $100,000 minus whatever the IRS is going to cut into for their piece of the pie. So a lot of really, really good benefits in doing this. But at the same time, you'd better have some thoughts and plans of, okay, is the taxes due? Where am I getting that from?
Yeah.
And honestly, to do it correctly, it's probably something you're going to want to do over 4, 5, 7, 10 years. If we're looking to significantly lessen the value of a 401k, say it's $1 million 401k, doing $25,000 Roth conversion today probably doesn't benefit you. But can we do $50,000 or $75,000 a year for 5 years or 7 years or something like that on a plan every year to do this, that over time we get the traditional IRA balance down. So maybe that lessens a required minimum distribution amount at some stage. But in doing it in stages, we start that 5-year clock going on the first batch.
And I think it's exactly what you talked about, Ken. The biggest thing that we always talk about is where's that extra money, the tax money coming from, right? Because it has to be paid in that year and from a separate account that's gonna cover this of when the conversion happens. But I think one of the biggest things that we talk about is that beneficiary conversation for somebody that has a big pre-tax account. It's one of those, rollover IRA, 401k, whatever that looks like, you've put a lot of money into. When somebody receives this money, if you're in a spot that, hey, we don't use a whole lot of it or whatever that looks like, and I know somebody in my family's getting it, that I don't really want them to have to, with the new rules of the 10-year rule and having to get the money out and RMDs, I'm going to be older. This is a great way that you can have beneficiaries receive tax-free money, is by paying taxes up front. Again, that's part of the conversation. It's basically 2 steps there. We're going to do the conversion. Money has to come from somewhere to pay the taxes, not from that account. And then the second part of that is the tax-free side of it, is once this account's in a Roth conversion account with that 5-year clock, you or a beneficiary at some stage is going to receive tax-free money on that account. So, there's not, and this isn't just a beneficiary play where, hey, I have to set this up. You can still use it. As you do that conversion, it's like, as I need some money, I have a tax-free account. That's great. And on top of that, once this money passes down to somebody on my beneficiary list, they will also receive tax-free. That money that has to come out over 10 years is tax-free to them. We run into that on the taxable side with taxable IRAs, right, Kevin? I mean, that's something on that 10-year rule. It's a new speed bump in the planning process of, hey, you just received this nice big IRA. That's great. But over the next 10 years, we're going to have to figure out a plan to get this out so it doesn't ruin you on the tax side. It's just Roth conversions can be an absolutely great tool if utilized correctly on checking all the boxes that comes with the details of it. You don't want to do it incorrectly because it can really hurt you on the back end. If done properly with the right amount of, saved money to cover the taxes, and the right ideas behind it, and getting that tax-free benefit. I mean, I know I preach it day in and day out to younger clients to just start a Roth IRA, because they will eventually be to a spot with a nice big tax-free account. This is just the second way to get to that exact same spot if you already have money in a pre-tax spot.
Yeah. The IRS is probably the one thing every American can agree upon. Nobody likes them.
Yeah, right.
Right. Whether you're what part or side of the table you sit on politically, it's the one thing that everyone probably agrees on. Yeah, if we can get over a little bit on the IRS by doing a Roth conversion, and then having tax-free money to take out 5, 7, 10 years down the line, or leaving tax-free money to beneficiaries. Yeah, let's go ahead and do that. I believe the earlier you start doing this, the better for you. You do get into some problems when you're getting Medicare. So you're age 65 or older and you're getting Medicare. There are some income, not income limits, but the more taxable income you have on your tax return, the more potential you're going to pay for your Medicare premiums. So if it's something you can start at 55 or 60 even and do it for a period of time, and then at 65 ramp back how much you're converting, I think there's value in that. Or it's okay, because we've had some clients just say, yeah, if for 1 year or 2 years I have to pay a little bit more Medicare premiums, I'm okay with this, because the bigger benefit is the long-term tax-free opportunities for this. But again, this is not a decision to be made lightly. It's not a decision to be made, in a 5-minute thought as you're driving to the grocery store. It's a let's sketch this out. Let's see what this looks like over X number of years. What could the tax-free portion of this grow to potentially, to make sure that there is enough value in doing it. We're believers of it's usually a multi-year conversion. Instead of doing a bunch in 1 year, or instead of doing a couple 100,000 in 1 year, let's do 50,000 over 5 years and split that taxable event over. Maybe we don't impact our Medicare premiums as much if we're of that age. We've had a smaller taxable event each year, but we've ultimately moved enough money over that it's made a difference.
And if you're somebody that's younger watching this and you're like, dude, I got to take money out of a taxable account and put it into a Roth, just start putting into a Roth, right? Like this is the key. The way to get around this is don't put money into those taxable accounts, open up a Roth IRA, fully fund that thing. So that way you got a nice big Roth balance without having to do any of this down the line. This is just the way of, if you're in a spot where you've done, had a nice pre-tax, 401k for a long time, and now you're like, hey, I see the benefits of a Roth IRA. You still are in those shoes to make that play too. This is just another way to get there.
This is probably more a message. There's a generation of investors that really didn't get the full benefits of a Roth.
Exactly.
In part because when it came out and it was new, and it was new when I first got into business, everyone was a little bit suspicious about it. The max contribution was also $2,000 a year, which again is better than zero, but really wasn't enough to make a difference. It's now $7,500 and $8,600 if you're over 50. So the amount you can contribute into Roth is significantly higher. This is really a message for someone who is old enough that didn't have the opportunity to take advantage of it.
Exactly.
Or even someone around my age that just didn't. If you fall into that category where you didn't take advantage of it, but you're starting to see the benefits, and maybe that runway to make Roth contributions isn't long enough, that maybe the Roth conversion is right for you. Or if you've been someone who's fortunate enough that your household income is too high that you got phased out and you wanted to make Roth contributions, but your accountant every year said, no, you can't do it. You don't qualify. This is, again, a way to circumvent the Roth contribution system by doing the Roth conversion. Like I said, this is kind of a new passion for me, honestly, the last probably year or so. As the rules have changed and they've loosened up who can do it and how much you can do, there is a high level of value for the current investor, as well as any sort of estate planning you're doing for beneficiaries. And again, if we can get over on the IRS by paying a smaller amount in taxes today and having a large chunk of tax-free money later, you can sign me up for that every second of the day.
Yeah, no doubt.
I will get our, all righty, Max.
Well, summary slide here. Just looking at, this is the contact slide, Kevin. You have the.
Oops, where am I at? Yep, my fault.
Nope, you're good. So if we're looking at it, guys, here, this is kind of the breakdown of going from one step to another. So you have a pre-tax retirement account. So those are your, traditional IRAs, 401ks, anything that you've put money to on a pre-tax basis. Those accounts we're looking at. You initiate that Roth conversion. So you decide, hey, I'm going to take $100,000 of this pre-tax money and put it into a Roth conversion account and pay tax on it. That's the third step there. Pay taxes on that converted amount. Remember, the tax money coming from somewhere else, bank account, non-retirement account, somewhere that you can have this money ready to pay for these taxes that will be on the Roth conversion. Funds move to that Roth IRA. So once the taxes are paid, it goes into that converted Roth IRA, starting that 5-year clock for you. That's a big part of that there. And then tax-free growth and withdrawals. That 5-year clock runs, always can get to your converted dollars, but the growth is on that 5-year clock. So after that 5 years is up, 59.5 is met. Tax-free growth and withdrawals can start, which is really the name of the game of this account. Looking further down in that, beneficiaries can receive tax-free money, a lot of great benefits that these accounts add. So if you're in a position that you're thinking about doing something like this, have the conversation with us, have the conversation with somebody, do some research, really put some thought to this. Again, this isn't a thought that just happens on the way to the grocery store and you decide, I'm doing all my money to Roth conversion. Really take some time, plan this out, see what it looks like, see what taxes are saved and how all that works. But this is
as Max has talked to someone, that doesn't mean your next door neighbor. Talk to an investment professional.
Yeah, right.
Whether it's Max or I or whoever you're working with. Someone that understands this, someone who's done this before. Don't rely on a coworker or your mailman. Not that they're not probably bright about this stuff, but get your financial professional involved, get your CPA involved.
Yeah.
So you understand what this looks like for you moving forward, and there's no shocks of, oh my gosh, I owe how much?
Yeah, exactly. That's the last thing
Taxes,
you
I
want.
wasn't
That
prepared
really
for
is the
that.
last thing you want there is something, yeah. You don't want to do this unprepared
Right.
and get a sticker shock when something like that happens. So as always, guys, connect with us. Check us out. Scan that QR code. Check our link tree out. Facebook, YouTube, Instagram. We're putting a bunch of good content out about these too. Don't forget, with these podcast episodes, we have different little slides with details to go on. So if it's something you want to check out more, click on some of our socials and find these slides, find these pieces that give a little more information as well. And like I said, you can connect with us. We have a text line on there, our phone number. Give us a call, shoot us a text, give us more video ideas. We're in for everything. We're just trying to give you guys some of the best information we can to help you with some of these topics that you maybe heard about and have questions and haven't talked about in a while, or just have in your mind. We're just trying to, like I said, get some of this stuff in front of you and help you out with it. So we always appreciate you watching. We're going to keep bringing them to you. So follow, like, subscribe, ring the bell notification on YouTube so it'll let you know when we post them, so you can stay up to date with some of these accounts or some of these topics you might have questions on.
Very good. We'll see you next time.
Yep. Thanks, guys.